Imagine spending 30 years paying off a house, believing it is the smartest financial decision you'll ever make, only to discover that keeping it could quietly cost you hundreds of thousands of dollars in lost opportunities. It sounds backwards. After all, we've been told that owning a home is one of the safest paths to building wealth. Never sell, people say. Real estate always goes up. But what if the house making you feel wealthy is actually preventing you from becoming wealthier? And what if the biggest financial mistake isn't selling your home, but refusing to even consider it? By the end of this video, you'll understand why some of the wealthiest people aren't emotionally attached to their houses, and why knowing when to sell can sometimes be more valuable than knowing when to buy. Welcome to Money Explained Differently, where we uncover the hidden side of money and explain the financial stories most people never see. Meet David. He's 57 years old and lives in a suburban neighborhood outside Denver. He bought his home nearly 25 years ago when prices were much lower. At the time, it was the perfect place to raise a family. 4 bedrooms. A large backyard. Good schools. Friendly neighbors. Over the years, something remarkable happened. The home's value more than doubled. Friends congratulated him on becoming house rich. David believed he had made one of the smartest financial decisions of his life. Then one afternoon, while reviewing his retirement plans, his financial picture revealed something unexpected. Nearly 70% of his net worth was locked inside one asset: his house. That realization changed the way he thought about wealth forever. Because a home can increase your net worth on paper without improving your daily financial life. Your home's value might rise dramatically, but unless you borrow against it or sell it, that money remains unavailable. It's wealth you can see, but not necessarily use. And that's where many homeowners become trapped. The house becomes both their biggest asset and their biggest financial limitation. But this is where most people get surprised. Owning an expensive house doesn't automatically make you financially flexible. Imagine someone who owns a $1 million home but has very little savings. Another person owns a smaller home worth $400,000 but has a large investment portfolio, no debt, and plenty of cash. Who is actually in the stronger financial position? Many people instinctively choose the millionaire homeowner. But financial strength isn't only about what you own. It's also about what you can do with your money. Liquidity matters. Flexibility matters. Having money available when opportunities appear matters. A house can't easily pay your medical bills. It can't instantly fund your retirement. It can't buy shares during a market downturn. It can't help you start a business tomorrow morning. The value exists. Accessing it is another story entirely. However, there is another side to this story. None of this means selling is always the better choice. For many families, keeping a home makes perfect financial sense. If your mortgage payment is affordable. If you genuinely enjoy living there. If moving would increase your costs. If you're building equity while avoiding high rent. Keeping your home may be exactly the right decision. This isn't a story about selling every house. It's a story about understanding when keeping one stops serving your financial goals. That's a very different conversation. Consider what happens after children move out. Millions of Americans continue living in homes designed for families of 5 or 6 people. Entire bedrooms remain empty. Large yards require constant maintenance. Property taxes continue rising. Insurance becomes more expensive. Heating and cooling thousands of unused square feet costs more every year. Repairs never stop. Roofs age. Plumbing fails. Appliances wear out. The house keeps demanding money. Yet emotionally, it still feels priceless because it's filled with memories. And memories are powerful. Behavioral economists often talk about something called the endowment effect. It's a simple idea. People naturally place a higher value on things they already own. Once something belongs to us, we become emotionally attached. We don't just see a building. We see birthdays, family dinners, holiday mornings, graduation photos, the place where children took their first steps. Those memories are real. But buyers don't pay for memories. They pay for square footage, location, condition, and market demand. Sometimes homeowners reject perfectly reasonable offers because they believe their house is worth more than the market believes. Emotion quietly replaces financial logic. The real problem is something nobody talks about. Every dollar tied up inside a house has an opportunity cost. Opportunity cost simply means choosing one option means giving up another. Imagine someone sells a large house, purchases a smaller one, and invests the remaining money into a diversified portfolio. Over many years, those investments may generate income, dividends, or long-term growth. No outcome is guaranteed, and markets rise and fall, but the important point is that the money is now working in different ways instead of remaining concentrated in a single property. Diversification reduces dependence on one asset. That's a strategy many experienced investors appreciate. But what if housing prices continue climbing? That's a fair question. Nobody knows exactly what real estate will do next year or even 5 years from now. Some markets experience incredible growth. Others remain flat for years. Some decline before eventually recovering. Real estate has created enormous wealth for millions of Americans. But history also reminds us that prices don't move upward forever without interruption. The housing crash of 2008 became a painful lesson for countless homeowners who believed prices could never fall. Many discovered their largest investment carried more risk than they imagined. That's why putting nearly all your wealth into one property deserves careful thought. What do you think? If your home doubled in value tomorrow, would you sell it, or would you keep living there? Share your opinion in the comments. There isn't one correct answer, and it's interesting to hear how different people think about this decision. Now let's look at something banks understand extremely well. Banks don't become wealthy simply because people own houses. Banks become profitable because money keeps moving. Mortgages generate interest. Refinancing creates new loans. Home equity borrowing creates additional lending. Buying and selling properties creates transaction activity. Movement creates business. Meanwhile, many homeowners spend decades trying to avoid making any move at all. Sometimes staying put is wise. Other times, staying put simply feels safer because change feels uncomfortable. Those are not always the same thing. The biggest cost is not the one you can see. Imagine your home requires $20,000 in repairs over the next several years. Most people recognize that expense immediately. But imagine another hidden cost. Because you decided not to sell, you also delayed investing money that could have earned returns elsewhere. Or perhaps you passed on relocating for a better paying career opportunity because you didn't want to leave the house. Or maybe retirement became more stressful because nearly all your wealth remained trapped in your property. These invisible costs rarely appear on receipts. Yet they can influence your financial future just as much as visible expenses. Let's return to David. He wasn't forced to sell. Nobody pressured him. Instead, he asked a different question. What job is this house doing for me today? Years earlier, the answer had been obvious. It gave his family stability, space, safety, community. Now those needs had changed. His children had moved away. His wife wanted less maintenance. Travel had become more important than mowing lawns. The house wasn't wrong. Their priorities had simply evolved. Eventually, they sold. They purchased a smaller home closer to downtown. Their monthly expenses decreased. Maintenance became easier. Some of the money was invested for retirement. Some created an emergency fund. Some was reserved for travel they had postponed for years. They didn't become wealthy because they sold a house. They became more financially flexible because they matched their assets to their lifestyle. That's an important difference. However, selling isn't automatically the smartest move either. Moving comes with real costs. Real estate commissions. Closing costs. Taxes in some situations. Moving expenses. Potentially higher interest rates on a new mortgage. If you sell only because prices are high without a clear financial plan, you may simply exchange one set of problems for another. Some homeowners sell during strong markets and later discover they can't afford another home in the same area. Others underestimate how expensive renting can become. That's why every housing decision should begin with your financial goals, not with headlines or emotions. Here's another question worth asking. If someone handed you the full market value of your home in cash today, would you use every dollar to buy that exact same house again? Many people pause when they hear that question. If the honest answer is no, it may be worth exploring why. Perhaps you'd buy something smaller. Perhaps you'd invest part of the money. Perhaps you'd move closer to family. Perhaps you'd choose a completely different lifestyle. That doesn't automatically mean you should sell tomorrow. But it does reveal whether your current home still matches your future. We often think wealth is about collecting bigger assets. Sometimes it's actually about creating greater freedom. Freedom to retire comfortably. Freedom to relocate. Freedom to help children or grandchildren. Freedom to invest when opportunities appear. Freedom to sleep well without worrying about large repair bills. Those forms of wealth rarely appear in property listings. Yet they often matter the most. Here's something many financially successful people eventually learn. They try not to confuse ownership with identity. Their house is a tool, not a trophy. A successful financial life isn't measured by the size of your living room or the number of bedrooms you own. It's measured by whether your money helps you live the life you actually want. Sometimes that means staying exactly where you are. Sometimes it means making a difficult decision to move on. Neither choice is universally right. The important part is making the decision intentionally instead of automatically following what everyone else believes. Because money isn't just about numbers. It's about options. And sometimes the most valuable option is the one you never considered because you've always heard the same advice repeated over and over again. Keep the house. Never sell. Real estate always wins. Reality is far more nuanced. The smartest financial decisions rarely come from following simple rules. They come from asking better questions. Does this asset still fit my goals? Is my wealth working efficiently? Am I holding this because it benefits my future, or because I'm afraid of change? Those questions can reveal far more than the current market price of any home ever could. The biggest lesson isn't that selling your house will make you wealthier. The lesson is that wealth isn't created by owning valuable things alone. It's created by making thoughtful decisions about how every asset fits into your life. Sometimes keeping your home is the smartest financial move you'll ever make. Sometimes selling it opens doors that staying never could. The difference isn't the house. The difference is understanding the hidden costs, hidden opportunities, and hidden trade-offs behind the decision. If this video changed the way you think about homeownership, then you've already discovered something many people never do. The goal isn't simply to own more. The goal is to make your money work for the life you want to live. If you want to discover more hidden truths about money, subscribe to Money Explained Differently. We explore the financial stories behind the decisions that shape everyday life.